Well, I want to welcome everyone today and thank you for taking some time out of your day to join us. We appreciate it. My name's Kirk Sarf. I'm the Director of Life and Annuity Sales here at New Horizons Marketing. And today you're joining us. We're going to have the topic of kind of a solution possibly for long-term care needs, but the topic is life insurance and discussing the long-term care rider. This is not necessarily a specific product. We do have several companies that offer a variety of products for this solution, but we'll hopefully get into some general information that will be of assistance to you today. So again, long-term care solutions, I will reiterate this probably a couple times. I don't feel like there's anything that's perfect in our field, but I do feel like the topic that we're discussing today, in my estimation, is one of the best, if not the best, solution in many cases for long-term care needs. So today's agenda, just some of the bullet points that we'll be covering as we progress through this next 30 minutes is number one, what you should know about longevity and long-term care. I do think it's good to have a general understanding of the statistics and why perhaps that we need as agents to be trying to find solutions for our clients. So the second bullet is paying for long-term care. Third bullet is specifically addressing the combination of life insurance with a long-term care as a possible solution. And then we'll kind of look at a couple case examples just to give you an idea of some of the specifics and drill down on what we are exactly discussing. Okay, first of all, what you should know about the longevity and long-term care. These are statistics, and these can move a little bit, and it does depend on your source, but they're pretty precise. They're not going to be off much. It gives you a good understanding, a good idea, but life expectancy in the United States is increasing. Right now, that's just under age 80. So that is a number that has changed from the last 20 years, of course. It's estimated, I think this is a big one and why we're here today possibly, is it's estimated that 70% of people that are over age 65 are going to require some kind of assistance in long-term care. That's a big number, and that's not a problem, but a challenge for many of us as agents. The national average cost for a year in a nursing home, and again, this fluctuates, depends on what part of the country you're joining us from today, but you're looking at over $85,000 a year, and I think we all know that number is going up each and every year. And in the 20 years, and this is again just a projection, they're projecting it just over 190,000 for a long-term care stay. And again, these numbers will shift a bit, but it just gives you and drives home the importance of what we do in trying to find help and solutions of the long-term care need for our clients. So it leads us into the next bullet, which is paying for long-term care. There's about 4 different ways that I can think of that how these costs, which can obviously we just shown, can be very dramatic for a family. But Medicare is one of the first categories I think we would all look at, excuse me, but it pays only for the medically necessary in a skilled nursing facility or a home health care. And the kicker is, and I think most of you on this call would probably know this, the maximum benefit for that is 100 days. And that comes with some asterisks. It has to be the 3-day stay in a hospital, and there are some languages within that Medicare contracting, Medicare terminology of how that 100 days actually works and what is paid for. The second one is Medicaid. We don't get into a lot of details about Medicaid. I think that's for an elder law attorney or a state representative to really talk more about that. Each nursing home has somebody staffed that would help with the details of Medicaid, but essentially, as we all are familiar with, it's when assets reach a certain point, a person can qualify then for Medicaid, which is then where the costs are taken care of by our government. excuse me, long-term care insurance policy. And again, that's where we kind of come in and different animals for the long-term care insurance, but it does provide care in a nursing home, residential care, home care, assisted living, those kind of items. We know that every insurance policy is a little bit different. Some of them can be very complex. I feel like the one we're going to discuss today is very straightforward. And then the fourth option is your personal assets and income. I'd sat down with some financial advisors and discussing really on the you part of it, of who really doesn't need the long-term care policy versus just you paying for it. And this number is up for debate, but they feel like people that are in the 3 to 5 million as far as liquidity might be just fine without a long-term care policy. And again, that depends, and that's kind of up for debate on really if that's a smart use of your money or your personal assets. How would you pay for long-term care? I think that's a legitimate question. So just looking at these bullet points, this could be us as agents really looking at ourselves or our families or obviously our clients. Do you have enough retirement income to cover these costs? We went over the statistics and we can project kind of what these costs might be down the road. Second item, would you have to spend down assets to make up any shortfall? In other words, now we're talking about the Medicaid, which again, I would probably recommend that people that, meaning your clients that are really in that category, that they see an elder estate attorney to really understand what that entails. Third bullet point, how would you feel about spending down your assets to qualify for Medicaid? Again, I don't really think that's up to us as agents necessarily, but I think we can point our clients into the right direction of meeting with an attorney that can help with that situation. And then finally, do you own a long-term care insurance policy? So what we're talking about today, and the main crust of what we're discussing, is a combination, a hybrid product, as they're often described, of life insurance with long-term care insurance with it. So the combination of a life insurance policy and a long-term care rider, not for everybody, but we feel like when you do the math on these types of policies, that it can be a very cost-efficient and actually a convenient way to help plan for the future. These long-term care riders can cover various points. The one that we use the most, products that we use the most, will cover adult daycare. It covers assisted living, family care, and of course, nursing home. So the funds that were discussed on the combo, the hybrid product, will cover these 4 bullets. Okay, how do these come to fruit? And I've dealt with claims. I'm a licensed agent. It's not necessarily my job, but I've assisted agents on claims as far as getting it rolling. And then I've had personal claims situations as well. The hybrid product is going to work just like a traditional plan as far as when it comes to claim time, with some variables. But how do we get it activated? How does it start? And as most of you recognize the list that's on your screen, there are 6 activities of daily living. If after evaluation your client has qualified for 2, in other words, they cannot complete 2 of these 6, then it would trigger a claim. The second part that can trigger a claim is cognitive. So again, this is an assessment of a professional. Just throwing out John Hancock, for instance, because I was working on a personal claim with this myself, and they'll send someone out to assess this. Of course, they need doctor's statements and will review medical records, but the cognitive part of the equation will also trigger a long-term care claim. This pretty much breaks it down and puts it to me in English for all of us to get it. I don't know how many of you on the call here today, the meeting, have written a long-term care policy, a traditional long-term care policy. The companies in that arena have shrunk over the past several years. I've been here 18 years now, and That pool of carriers just keeps getting smaller and smaller. The hybrid product here, that first bullet point, I think is a big point that you are not going to have rate increases. Anybody that's sold traditional long-term care has probably experienced single to multiple rate increases for your client, which is never any fun for anyone. The other thing that's pretty big selling point is, in plain English, somebody's going to get paid. It might be with the hybrid product, it might be the insured while they are living in the form of a long-term care benefit, or it could be their beneficiary in the form of a income tax-free death claim, death benefit. And actually, it could be both. So you follow the slides up there. This is it, the basics. You pay a premium, your client pays a premium into a life insurance policy that has a long-term care rider attached to it. And then your final area there, it's going to cover long-term care expenses. It's got a death benefit. And that final thing there, a combination of both. If I backed up to the somebody will be paid, it could be a combination of both. If I'm the insured and I go in a nursing facility, I may expose and extinguish half of that policy's value. If it's $100,000, I may use up 50,000. Then I die in that nursing home. So then 50,000 is left to go to my beneficiary. So that's what we're talking about in a combination of both. If you never need long-term care, the entire death benefit is going to go to your beneficiaries, and it's on an income tax favored basis, as we all know. So it's simply at that point just a traditional life insurance policy where a death claim is made, and your beneficiaries receive that tax favored, income tax favored death benefit. Some case examples. Don't get caught up on the numbers so much, but as one of our main carriers, which is John Hancock, their first sheet of their illustration looks like what you're seeing right now. And I'll just point out some of the things that are on this sheet. You don't, if you're just starting out, you don't have to drill down in all the languages and the illustrations and all the numbers. If you can get yourself to understand this first page, and then personally, I get my clients to understand the concept. I don't get them focused too heavily on numbers. However, they do kind of want to know what it's going to cost, but I get them focused more on the idea. So this first page of the illustration is going to show them their premium. Its second one is going to show the death benefit. The third is going to show their long-term care benefit. And I'll stop right there just a second. That number that we have on there, it's not 100,000 life insurance and also another bucket of money of 100,000 long-term care insurance. It's the same bucket of money or vault of money, so to speak. That fourth, as far as an accelerated benefit percentage, we're going to be able to access 100%. That whole $100,000 we are going to be able to access on this particular example. The rider that we attached on this one is a 4% rider. So as you scroll down a little bit on your screen, you see monthly maximum benefit amount of $4,000. So that's what I can use of this policy each month for any of those services: home health care, nursing home, assisted living, adult daycare. So I've got up to 4,000 in this particular example to use each month. So when I'm presenting this to my clients, I get them to understand this first page. I don't start getting into the nuts and bolts of the UL, of guaranteed side, non-guaranteed side. I get them to understand that here's your benefit. Essentially, it can be a death benefit or a long-term care benefit, and it's going to give you up to 4,000 on this example to use for long-term care each month. All right, and that's showing it in the form of an annual pay there. And we'll go to the next one. You can pay for these things a variety of ways. So what you're seeing on the screen now is everything we just talked about, except a little bit bigger number, and that's a single pay number. So in the top left corner, you see it's a female. She's preferred which is actually the second best health rate. She's 65 years old, and there are a variety of ways to pay for this. I'm just going to take a quick time out while I'm on this. Some of you on the call have probably heard me say this, but I am a shopper. I look for the best deals on everything. So I'm an analyzer. We obviously here at New Horizons have a lot of different carriers. We're independent as you are. And I ended up coming to this particular product that you're seeing on the screen. I personally did mine on a 12 pay just for where it lined up for me on what I would probably project when I'm not in my high income earning years. So my point is you can pay for this monthly, quarterly, semi-annually, annually. You can do it as a one-time pay. You can do it as a 10 pay, 12 pay, whatever. It's infinite. So don't let when you're showing this and your client's going to want to know all these costs and how we pay for it, my sales point on this would be, let's get you an application. Let's take the application. Let's get through underwriting, and then we will start plugging in some concrete ways on the best way to pay it. So you saw an annual pay on the first screen. You're seeing a single pay on this one, but don't go down that road too far. My opinion, I'm still sticking to the concept on this page, which will be my focus.
Got a question here.
Okay.
So if you used $4,000 in 1 month, the $100,000 death benefit would essentially go down to $96,000?
That's correct. That is correct. So it is just taking, it's a great question. So that vault or bucket of money is just taking dollar for dollar. When I use it in long-term care, it gets pulled out of my bucket. So just in that example that the person asked, if I used 1 month of it, now my benefit is down to 96,000. I die after that 1 month, my beneficiaries have 96,000 income tax-free dollars. So it is a dollar for dollar. Really kind of getting into some pros and cons, and I get people that call agents and clients alike to talk about the difference, traditional long-term care. Most of them, if I have a family call me because they know I'm in insurance now, that they want to know about long-term care. So kind of have to educate a little bit here. So traditional long-term care, and hey, line it out for them, pros and cons. So pro of traditional long-term care, most of them are going to have that inflation rider that does cost money, but your bucket of money or your vault of money is going to grow with that inflation rider. Premiums will cease when you go on claim. So the hybrid product that I was showing you, which was a John Hancock in that particular case, if I go on a claim, a long-term care claim, and I'm on a monthly pay, let's just say for instance, I'm still going to keep paying my premium because it is a life policy. So on my screen that you're seeing now, a pro for traditional long-term care is that when I go on claim, my premiums stop. Cons for long-term care, traditional long-term care, is rate increases. And I've experienced them with clients, and it's no fun. And I've experienced multiple ones, and you can just about guarantee a rate increase. It's just going to way it happens. And I'm just going to be blunt honest about it. In my eyes, I feel like I have witnessed and I see from agents putting things through us, and personal experience is as clients age, the insurance company starts to squeeze them a little bit with the rate increases, and almost when they're going to use it, that these things become astronomical. That's what I've seen. So the rate increases is a definite con. The other argument you're going to get from your clients is, boy, I'm paying all this premium, maybe at a rate increase. What if I never use it? So that would be in the con column for a traditional plan. Okay, life long-term care, the hybrid product. It has its pros and cons. Some pros we've already covered. Somebody's going to use this. Somebody's going to get paid. It's going to be the insured in the form of long-term care, or it's going to be the beneficiaries in the form of a death benefit or death claim, or as we discussed, it could be both. I could, as the insured, pay for a nursing home for a couple months. I pass. Rest of the money goes on to my family. The other pro is a no rate increase, and you guys can call me and we can discuss this more on how this policy, the nuts and bolts of it really, really work, but no rate increases is a big deal. Cons, just telling you point blank, no inflation rider, and most people, including myself, probably didn't buy enough or won't buy enough. The other thing that we kind of hit on here is the premiums are going to keep being paid until death, unless it's a limited pay. So I gave you my example. I'm on a 12 pay. Mine's going to be done in those 12 years. Okay, so that second bullet there on the cons really only comes into play if somebody's on a life pay. In general, and I will break this down with clients that want to discuss this with me, and these are my thoughts. So you put your own thoughts on paper and study hybrid products, study traditional plans, and come up with your own thoughts. But these are my thoughts. I like the monthly benefit. It's a reimbursement on that particular product. I like that because any of you that have been through claims, you may have a $300 claim on one day, no claim on the next, and that thing can be back and forth. So if you're on a traditional plan that pays a daily, and some of them will pay monthly for sure, but you're on a daily, that can become a little bit of an issue. So I like the idea that it is a monthly benefit. Okay, stay with me on this one. So you can read the bullet. Chances are most likely that for a female to use the long-term care and a male to die. If my dad was in a nursing home 139 consecutive days before we actually got him out of there, but I ate several meals with him, tended, and there are 2 tables of males and about how many tables, double-digit tables of females. So statistically speaking, females are the ones that go into nursing homes. Females take care of us weak guys or we die. So that next bullet point is where I'm heading with this, and I hope I'm making sense. But any shortage, going back to where people aren't buying enough, a man and wife, any shortage, I feel, for the female can be made up with the death benefit of the male. So I most recently talked to a school teacher and her husband who worked in one of our local factories here, and I explained that to them. You know, something's better than nothing, no doubt about it. Probably not going to be able to buy enough, but budget tells us what we can buy. And the plus, skeptically a little bit on it, but if there is a shortcoming when the male passes, that bulk or that income tax-free money can certainly be used to help long-term care costs for the wife in that case. We hit on this a little bit. 4th bullet over there. Traditional long-term care has a tendency to price the client out when the time nears to utilize it, what I just went over. Something's better than nothing, because this, and I'm calling it a threat because it is. It's a huge problem in our country. This threat is real. These costs are real. If you have not sat by somebody in a nursing home and talked to a family that are wondering if they're going to lose this, this, and this, all the money that's going out, it is a real cost. Most of you that are on this call today, this meeting today, I bet you have experienced a family member or a friend's family member that have endured these costs. So that threat is definitely real. The other thing I like to do is what I kind of said is to apply. When somebody's kind of on the fence a little bit and they're kind of taking you through the numbers and the what ifs, just apply. You know, put that thing on paper. They're going to have an exam. Medical records may be pulled depending on their health from the exam, but just apply and see what kind of offer you get. And then at that point, you can plug in some real numbers. Last bullet on that is using existing life insurance policies in the form of a 1035 exchange can really help reduce the premium. So I had a farmer, man and wife, discovered that he had 2 Mass Mutual policies that were pretty thick in cash. They were great policies for what he wanted them for back in the day, and they did build some nice cash. Really, they're overfunded, so they would be a cash cow in my eyes. We would use those monies to 1035 those over into, in my case, the John Hancock policy, and that really reduced his premiums. And we can always give you some examples of that, but don't overlook that as a real asset in really this avenue of helping solve a problem here. I don't know if anybody has any questions, if we've had any on the snap, but we are here to help you help as many people as you can, because I've lived through this. That's why I have a policy personally. That's why I picked a hybrid policy myself. So I believe in it. Like I said, any of you that have seen money fly out the door because of the nursing home costs, something has, I mean, it's good to plug something in if you at all possibly can. I personally, and again, you guys can analyze it yourself, I like the hybrid product just because of the reasons that we had listed on the slides. There's a couple of questions, Jason.
Yeah, Jonathan asks, can you all do the Care Matters product with Nationwide?
We do have that. We have, in fact, before I came in here, I have a sheet and hold it up here, but you know, there's like several companies. We're independent, so there's really not a whole lot of companies you can name that we don't have. So they all have their pluses and minuses. I personally looked at Nationwide. For me, that was not going to be the route to go. And we can discuss one-on-one, or you call me sometime or email back and forth of why I felt that way. But again, all we are as agents are the assistant buyer. So we can only address the pluses and the minuses, and situations can be different. But the short answer is a yes on that one.
Okay, and which carriers do you recommend getting appointed with to offer this?
Yeah, you know, if you are not appointed with anybody, and we get a lot of agents that will call in or email us or get on a chat or whatever, that they might just be starting out. But I always like to start a little bit small and then build out. So if I'm talking about, I would start with a carrier, and I would have to start with John Hancock. It's a just-in-time appointment. So you do have to be LTC certified. I want to make sure you guys understand that. So that's a requirement, even though it's a life product. With John Hancock, you have to be LTC certified. Jenny and Lisa in our office can help you with that, on what that exactly means. But if I had to make one recommendation out of the gate, it would be John Hancock for a lot of reasons.
Any other questions? Okay, does the death benefit grow over time or stay the same as when you bought it?
Yeah, it does not. It's going to be a level death benefit it's a UL chassis that we're looking at. It's very conservatively built. I'll go just a little bit deeper into the weeds here. The guaranteed side of this UL chassis that we use goes to life expectancy plus a few years. So that's based on gender, age, and the health rating. And then we build the current side to go to age 125. Built mine the same way. If an agent wants me to tweak that a little bit, I'm more than happy to do that. That's where we feel comfortable. The interest rate on this product, it rarely changes. It's changed in the last 15 years, I think 4 times. So you know our climate and interest rates and stock markets and things of that nature. So it's a very conservatively built product, and the death benefit stays level.
Okay, do agents go to you, Kirk, for the illustrations and plan recommendations?
Yes. Myself and Rhonda in our office, we will take care of you. She runs the illustrations, as do I, but we will turn them around. You email us or call us the specs on it. We'll make sure that you're helping your client. We'll make sure you're putting them in the right thing, the right product to make sure you're addressing their situation. That's one of the best things in my job, is that the opportunity that we get to help you help people. And the bottom line is to help as many people as we can. We get paid for it, but the joy of helping a family, these are tough times when you're talking about nursing home or death, and what we do for our clients and their families, you can't put a price tag on it.
Okay, anything else, guys?
Well, I don't see any other questions. And I want to thank everybody. I know everybody's time is valuable. Please don't hesitate to contact me. We can have a discussion and drill down on these things a little bit more. I think it's something that it's a service that we really need to offer, and ask our clients a few questions and and then see if we can't help them with a solution for example, the hybrid product here. But thanks again, everybody. We really appreciate it. We appreciate all you do and all the people you help. Thanks and have a great day.